You're invited to imagine what's next. What the next view you wake up to will be. Where your next adventures will start from. Your perfect space to entertain. And your sanctuary to unwind in. As you begin to imagine your new place, we'll be here to help you find it. Because nothing compares to what's next. Sotheby'sRealty.com.
Is India's first retail mall-focused REIT or real estate investment trust worth your money? Welcome everyone to the Property Show as Nexus Select Trust, a Blackstone fund company's IPO opens for subscription in the coming week. We put the spotlight on what does this REIT mean for your portfolio. Before we grill the company leaders to tell us why we should trust them with our savings, here is what a REIT investment is for those still uninitiated to this form. REITs, or a real estate investment trust, is essentially a company that owns and operates different kinds of high-value real estate. Office buildings, malls, warehouses, hotels, etc. Now, a REIT trust leases out the properties it owns and collects rents on it. The collected rent is distributed among shareholders as dividends to generate a regular income stream. And if the net income earned and the value of the real estate goes up, that also gets captured in the listed unit price and comes to investors as capital gains. Now, the Nexus Select REIT IPO, which opens on Tuesday, May 9th and closes on Thursday, May 11, 2023, operates 17 Grade A malls, including India's most celebrated mall, Select City Walk in Delhi. It also owns 2 hotels and 3 offices. But malls make up for a majority of its real estate and therefore, it's being termed as India's first retail-focused REIT. The price band fixed is at 95 rupees per unit to 100 rupees per unit. Investors can make bids for a minimum of 150 units and in multiples of 150. Now, the bottom line is, you and I can't really afford to buy such high-value real estate directly. So, REITs become an important vehicle for us to diversify our portfolio. Joining me for more details of the IPO are Asheesh Mohta, Senior Managing Director, Blackstone, Dalip Sehgal, he's the CEO at Nexus Malls, India, and Arjun Sharma, Chairman of the Select Group. Dalip, first question is to you. Short and simple, give me 3 reasons why I should give you my money.
Okay, great. There are many more than 3, but let me stay with 3. The first one is that size and scale. I think we are India's #1 platform with 17 malls, as you said, 14 cities, almost 10 million square feet of space. What does that do for us? It allows us to, we are basically a model which is based on acquisition. So it allows us to, expand quickly once we've acquired an asset, to go into even smaller towns and bring in the brands. So that's the first one, which is size and scale. The second one is that we are essentially talking about an India consumption story. So to my mind, it's not just a real estate play. To give you 3 key statistics, we have 3,000 stores, 1,000 brands, 130 million footfalls, and 1.3 billion in terms of tenant sales. So if you triangulate all of this, Nexus Select is actually at the center of the India consumption story. So that's the second one. It's not just a real estate play. It's actually at the heart of the India consumption story. And the third one is great yields. I'm sure you've seen the numbers. We're looking at 8.25% in year 1 and post-tax of 7.1. And that's higher than what a GSEC would give you, higher obviously than an FD and a lot of other instruments. So that's part 1. Part 2, like you said in your initial talk, that there is also appreciation that is possible with an 8 and 9% growth in NY. So you're looking at both. So these, to my mind, are the 3 top reasons. The fourth one, which if I may add, is that we've had very, very strong growth post-COVID. So one of the things that everybody keeps asking is that what happened to the malls during COVID? Obviously, 2 years were difficult, but post that, we've had 128% growth over FY 19-20, which was pre-COVID. So I think these are the 3 or 4 key factors, to my mind, that actually would help the investor to make a call.
And you made reasonable amount of profits in the 9 months ending, December 2022. Asheesh Mohta, third REIT by Blackstone in India. So congratulations. Now, Blackstone's always said that we're going to generate attractive returns for our investors in any environment. Of course, pandemic aside, my question is, How different do you believe this retail-focused REIT's trajectory will be when it comes to dividends and yields? Upfront, you've said, yes, it's higher. But if I just look at office REITs, they've been very steady in dividends between 6.8 to about 7.5% at their best. But they haven't done very well in capital appreciation. Are you expecting Nexus Select REIT's journey to be different or similar?
So I think a couple of things, Manisha, and thanks for having me on the show. But if you look at dividend yields itself, so you spoke about between 6 and 7%. That's what commercial office REITs trade at today. Compared to that, Nexus Select will have a year one distribution yield of about 8.25%, a compounded yield of about 9% average over the next 3 years. So really, just on a distribution perspective, higher than what we've seen in the commercial office space. I think over and above that, I would add the way the rental contracts are structured. These do allow you to participate in the sales upside. Dilip spoke about 28% sales growth. That's led to almost 13% of our total rents coming in from the sales turnover. So you actually participate in sales growth as tenants sell more, right? So that's really where you start seeing the growth as well, and which will ultimately lead to sort of capital appreciation in these assets. In terms of the office space, I think what we've sort of seen over the course of the last couple of years is a little bit of a slowdown or a push out in terms of demand as the US starts slowing down. But I do think the long-term fundamentals of India in terms of cost competitiveness, just our ability to generate a very high amount of skilled labor, just puts us in a very, very strategic advantage when you think about US firms looking to offshore jobs. So while there might be a temporary sort of dislocation in that, I do think medium to longer term you will see that trend sort of reverse, and we will start seeing growth rates in the tech space or leasing in tech office come back to normal levels. So yes, I do think both sectors continue to be robust. I do think there are some additional levers for retail that we don't see in office.
Are you expecting any short-term pain in retail as well if the global economy slows down and one is not able to bring down interest rates or inflation at fast enough a pace?
Not really. If you look at recent quarter-on-quarter growth, we've pretty much grown at north of about 25% every quarter compared to pre-COVID levels. Now, I don't think 25% is sustainable, but if you've seen what our growth rates have been pre-COVID as well, we've grown at about 11%. So I think early double digits growth in Indian consumption is very, very feasible as we've seen in the longer term. So that's something that we definitely believe in and have seen in the past as well.
All right, let me move to Arjun then. Arjun Select City Walk, the Star Mall of India, almost seems like the trophy acquisition for Blackstone to enable them to launch the REIT. So how much of a say will you and the rest of the Select management have in the Nexus Select Trust, and anything that we should keep in mind for shareholding patterns, roles and responsibilities, governance, etc.?
Thank you, Manisha. Thank you for having me on the show as well. This is a great opportunity for individual group of mall owners to look at monetizing their assets. A REIT is just the perfect platform because the government allows you to transfer your shareholding into a REIT unit without a capital gain. And this is a singular process which enables the financialization of these assets. You talked to roles and responsibilities. The Nexus Select has invited us to be on the board. Our management teams are going to be integrated. Nexus has a great management team. Select City Walk has a great management team. When the two combine, you get probably India's finest management team that will be in a position to not just manage these 17 assets, but also to acquire future assets going forward. What is our residual stake? We will have approximately 24.75% of the whole REIT post the dilution. We are not looking to sell anything as a family. We're not leveraged. So we're looking at this as a long-term platform to participate in India's consumption story. And I think that's what Dalip and Asheesh are alluding to. This is not just a pure real estate play. This is a full participation of India's urban consumption story, and a consumption story that has not seen the kind of slowdown that you may have seen in other FMCG companies at the bottom of the barrel.
All right. Okay. Dalip, over to you. How are you so confident that the growing adoption of online shopping will not, come and bite us just in a couple of years, just as it has in the developed markets like the US? Retail REITs have been under quite a bit of pressure there post the pandemic. So pandemic long gone, the performance is still very, very unsure.
Sure. I think that's a fair question, Manisha. Let me answer it in two parts. Number one, structurally, our retail markets are very different. Just to give you a couple of numbers, if you look at all of modern trade, including malls, etc., that's 7% of the total $1 trillion consumption in this country. E-commerce has grown substantially, but still is 6%, which means that 87% of consumption in this country still goes through traditional trade, mom and pop stores. There are 12.5 million of them. So structurally, we are very, very different from even China, forget about the US. So that's one. So the growth that has happened at the expense of traditional trade. Going forward as well, if you look at any estimation over the next 3 to 5 years as well, even with very strong growth of 11-12%, 80% of the consumption, even 3 years from now, will be through traditional trade. So unlike in the West, where I think e-com was growing at the expense of modern trade, malls were taking a hit, I think in India, both have grown simultaneously and will continue to do that. I'll give you just two examples. One is that a lot of brands that started online, so you take a Nykaa, you take a Lenskart, Mamaearth, a lot of brands that started online, today have a very, very strong presence offline as well. So Nykaa, for example, is in all our malls, right? And gradually in the beauty space, there are a large number of brands that are going to come in. So I think in India, because there is so much of headroom for growth, given the fact that we're still a very traditional structure in terms of retail, I think for the next few years, I don't see, that kind of situation that's happened in, say, the US or Europe or indeed in China.
All right, then let me come back with the valuation questions at 95 to 100. How are you justifying it? Some initial feedbacks that I've got from the wealth managers is that it's a little bit stretched.
So look, if you, we currently try pricing this to an 8.25% dividend yield. If you discount all of the growth, that Dalip sort of alluded to, I spoke of in the past. If you compare this to any fixed income kind of product, out there on a post-tax basis, these yields that you would get from Nexus Select would be significantly higher. So let's compare this to, a fixed deposit, debt mutual fund. If you look at our average 3-year yields, as I mentioned, we expect this to be in the range of about 9%, or so over the next 3 years. If you have a similar debt mutual fund, which gives you the same kind of yield, the post-tax returns to you at your marginal tax rate would be, less than 6%. And that's just because the entire interest would be taxed at your marginal tax rate. If you look at the REIT, a large component of the distributions are actually tax exempt, right? So, almost 55%, of our year one distributions are dividends, which are completely tax exempt from a REIT's perspective. You have 15%, which is essentially coming in as the return of capital, which is again tax deferred. So really only about a third of the distributions attract tax. So if you think of a 8.25% distribution yield, it translates to a post-tax yield of 7.1%. Okay. Significantly higher than anything else that you get out there in terms of comparable products. And this is discounting the growth to be zero, which in our past has obviously not been the case. And going forward, we expect strong growth to continue.
All right. Final question, Dalip, quickly. You said that, of course, there is a plan to, pare down debt with the IPO proceedings and then also look at new acquisitions. Tier 1 versus Tier 2, where would the next, market expansion be? Any quick wrap on that? Okay.
We are currently in 14 cities. Now, what is the next step? I think, obviously, to consolidate whatever we can in these 14 cities. The second level of growth would really be in what I would say are state capitals, which are very high in terms of both population density as well as growth. And then there would be tier 2. Let me just give you 2 examples of what I mean. We opened a mall in Bhubaneswar in 2018. I think none of us expected that Bhubaneswar would respond the way it has. It is one of our best performing assets today. So clearly there is enough and more consumption appetite as we go even into tier 2 cities. Another great example of that is Amritsar, a city where, clearly there are a couple of malls, but our mall has done extremely well and continues to grow very well. So I would say, 1, consolidate whatever we can in these 14 cities. Number 2, look at state capitals and pockets of consumption where we can, find assets. And the third, obviously, is to look at beyond that into tier 2. One statistic that may be of interest, there are 115 towns in this country which have a multiplex. To my mind, over the next few years, no reason why all these 115 towns shouldn't have a reasonably good mall. Well,
you've got your job cut out then. Thank you so much. All the very best, gentlemen, for the IPO. Let's see how it fares. It's a new product, a relatively new product, at least for retail, it's absolutely new. And I hope it's well received in the markets. Thanks again.
Thank you, Manisha. Thank you very much for having us.
Portfolio diversification and regular income from real estate that you simply cannot buy as an individual are 2 big strengths of a quality REIT. But do consult your financial planner and read the offer document carefully if you decide to go ahead and park some of your savings in Nexus Select Trust IPO. On the other side, we bring you face to face with Neoliv, the new kid on the block taking a big bet with India's residential sector. Stay tuned.
You're invited to imagine what's next. What the next view you wake up to will be. Where your next adventures will start from. Your perfect space to entertain. And your sanctuary to unwind in. As you begin to imagine your new place, we'll be here to help you find it. Because nothing compares to what's next. Sotheby'sRealty.com